Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hey guys, it's Robert from the College Investor here, and today we are going to start diving into some deeper tax topics, and we're going to start with a 1098E. Oh boy, what is a 1098E? And this is for people that have student loan debt, and this is your student loan interest statement. And we're going to dive in and talk about what matters, why you should care about it, and what to look for. Because right now, I have gotten more tax questions than ever before, because in the wake of the new tax reform bill, many people with debt are starting to wonder whether or not they're going to even be able to take the student loan interest deduction next year. And the answer for the most part is yes. People will still get their 1098E and they will still qualify for the student loan interest deduction. But there might be some cases where you don't. But if you have significant student loan debt, this deduction could yield you a few $100s in savings on your taxes. So first off, how did the tax reform bill affect the student loan interest deduction? And for a long time, it seemed that the student loan interest deduction was going to be eliminated. However, the final bill, the student loan interest deduction remained intact. It skated through. And this means that borrowers can take an above-the-line deduction on student loan interest payments next year. Unlike most tax deductions, you don't have to itemize your taxes to take the student loan interest deduction. That's what it means by above the line. That means even if you get the higher standard deduction, you still might qualify for the student loan interest deduction in 2018. So who qualifies? Well, to take the student loan interest deduction, you must pay at least $600 in student loan interest in 2018. If you're struggling with student loan debt, that's probably not very hard, but you can only deduct a maximum of $2,500 in interest paid. And so the deduction is an adjustment on your gross income. So if you paid $2,500 in interest and you earn $60,000, you will pay taxes on $57,500. Do you see how that works? It takes $2,500 off your income. For the purposes of the deduction, it doesn't matter whether your interest is paid on federal loans or private loans. Both of them qualify for the deduction. And the deduction will go to the person who is legally required to pay the student loan interest. That means if you are a student borrower, it's your interest deduction. And if you're a parent borrower, if you have a Parent Plus loan, the parent gets the deduction. Married borrowers must opt to file their taxes as married filing jointly if they want to qualify for the deduction. So realize if you file married filing separately because maybe you are doing things like income-based repayment, you're not eligible for the deduction if you file separately. An important thing to remember. The student loan deduction is also affected by your income. It's a deduction that phases out as your income grows. If you make more than $80,000 as a single filer or $160,000 as a married couple, you will no longer qualify for the deduction. But your deduction is based on your modified adjusted gross income. So don't just say like I'm making $80,000 this year, I'm not going to qualify. Things like 401k contributions and HSA contributions lower your income, which may make you eligible for the student loan interest deduction. So what do you need to know? Well, you're going to need a couple things. First off, you need to get your 1098E, and most borrowers will get that by January 31st. And in box 1 on your 1098E, it's going to contain the total interest you paid on your student loan in the previous year. If you paid more than $600, you should qualify for the student loan interest deduction as long as you don't go over the income limits. The 1098E is a super basic form. If you're doing taxes yourself, it honestly takes 30 seconds. You take what's in box 1, you put it in your tax software, and boom, it will let you know automatically if you qualify or don't qualify for the student loan interest deduction. If you are going to have an accountant or a professional do your taxes, make sure you bring that Form 1098E with you and make sure you show it to them so that you make sure you can get everything that you deserve and get it qualified for. A tax professional might not know you paid student loan interest if you don't bring this form with you. All right, well, hopefully that makes sense. Hopefully you learned a little bit about what the 1098-E is, if you qualify for the student loan interest deduction, and how the tax bill will impact you if you are a student loan borrower. All right, guys, let me know if you have any questions. Leave them in the comments. This is thecollegeinvestor.com/episode 38. I would love to know your thoughts. All right, guys, thanks very much. Talk to you next time.